Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So it's that time again where we look at two things. First thing we're going to look at in today's video is all the dividends that I've received for the month of August. And then the next video we will be looking at the portfolio, the entire portfolio. I'm planning to make some changes in the long run, inshallah, so I'll share that with you guys. Like I've always said to you guys, anytime I'm making any changes to the portfolio, I've always shared it with you guys on the Patreon account. I've always shared it with you guys on the Discord, on the Patreon account, then shared it with the rest of the community. So I'm going to continue doing that. But today's video is not just about dividends, in terms of dividends that I've received in the month of August. So we're going to do things slightly different. I'm going to share with you guys my top 10 an income source. So the top companies that pay me the highest, if you like, and I'm going to show you a little bit details of those companies and what I would be doing inshallah moving forward, because these companies are paying me per year. They pay me £1,500 per year, which is quite a lot of money. Okay, so I'm going to share that with you guys inshallah. Then I'm going to show you how much I've received for the month of August. Then inshallah what to expect in September. September is going to be inshallah a great month for the dividends investors, I guess, and actually I'm expecting quite a bit. And then inshallah we'll wrap up the video. So if you are here and this is your first time, this is my actual portfolio. This is not fake money. This is not money that I've inherited or anything like that. This is money I worked hard for, and my goal inshallah is one day to be able to retire on basically my source of income that I'm getting from my passive income side of things. So I'm talking about this portfolio, I'm talking about properties inshallah. I just own basically 1.5, let's say, inshallah. I've got a bit of news coming up, but then maybe I'll let you know inshallah when things are ready. But right now I've got one property that is rented in the UK. The income from there, the income from here. One day my plan is inshallah to retire. That doesn't mean in the next 5 years, for 10 years. That could be next 15 years. So what I'm trying to do is build a passive income, source of income that inshallah I can retire on. And so basically what I'm trying to do here is build a portfolio full of dividend growing companies, as well as of course some growth companies. Right now there's none in this portfolio that don't pay any dividends apart from the ETFs. So I'm buying high quality businesses that are growing that dividend year after year. Some of them of course are undervalued at the moment, some of them are overvalued, and that's just normal. Some of them are down for quite a bit, some of them are up a lot. So I've got a mixture of portfolio, and I'm trying to also make sure I have a diversified portfolio that's not just a one sector. So I'm not trying, there was a one point I had more consumer staples, and I've always actually had more IT related companies. So I have always had information technology companies, because that's my field, and I know a lot of these companies. I know how tech works and a lot of these things. But then what I've realized over a period of time is just to kind of really sit back and think about, okay, if the energy companies are doing well, then I'm actually missing out if I don't have any energy companies. If tech is doing well, then I need to have some tech companies. So I'm trying to build that portfolio inshallah I've always said between 20 and 30 stocks, just to make sure that inshallah are kind of diversified, but also at the same time you've got some high growth and you've got some of those income paying companies. So what you're going to see today is some high quality businesses and some dividend. So some of these companies in this portfolio are there just for the dividend, just kind of supplement that dividend growth, if you like. But some companies, for example ASML, for example, the dividend is not a lot, but the good news is they actually growing that dividend, and they are high tech companies. So they are actually, price appreciation wise right now, if I was to sell it, I'll be up about 35%. So that's absolutely huge. But at the same time, you need to have the consumer staples, the slow growers that have a free cash flow. So when you're building a portfolio, it's entire, there's a whole science behind it. Anyway, I'm going to get into the video now. I'm going to share with you the top 10 companies that are paying me over 1,500 a year, and then I'm going to show you all the dividends that I've received. If you like this type of content, please join us at the Patreon account, where you get access to a lot of things, including the family portfolio and so on. And then at the same time, you get a private, enjoying the private Discord, where a lot of brothers are actually sharing, good practices every single day about the news, about everything that they own, things they're buying, why they're buying, asking each other questions, which is quite nice. So hopefully we can build a nice community where, everyone can contribute, inshallah, in the long run. In this, just talking about the general markets, a year to date, we're up about 19%, which is absolutely huge. So despite the markets not doing well over the last whatever weeks, about 3-4 weeks or so far, we're still up about 19% for the year when it comes to S&P 500, the Dow Jones over 10%, the Nasdaq over 18%, and the FTSE is actually up about over 8%. So, and that's what we want to see. We want to see where we are by the end of the year, inshallah. And again, if we're up 19% is way more than what you would be receiving right now if you leave your money in the bank. And this is, for me, important. Okay, 1 year we might get 19% price appreciation and everything. The next year we might get 20% down, but on average in the next 15 to 20 years, you're more or less guaranteed to be, inshallah, to have a portfolio that is basically beating the basically just your money sitting in an account. So we're going to focus mainly on the income side of it. There are other information. You can pause the video and I will give you a little bit of commentary about each of the company, but just pause the video to have a look at some of the companies that we're going to talk about. And like I said, these are the basically and I'm going to do it basically from 10 to 1, inshallah. So 1 being the highest, inshallah. And the first company we're looking at today is automatic data processing. This is the company that I started buying, I think, about 2 years ago when it was really undervalued, and then since then it actually has gone up a bit. So right now it's a fairly valued $280 per share. In terms of dividend side of things, as you can see here, they are basically paying about 2%. They are growing that dividend every year, which is quite nice, and they are a dividend king. Again, why is that important? That kind of basically makes me happy because I know they're not going to cut their dividend anytime soon. Again, of course, the 3M has done it before. AT&T, companies like that have done it before. Unless the company runs into massive financial problems, okay, it's very difficult for these companies to cut. And when something like that happens with 3M, we knew for 3M, we were waiting for it. I've said it even almost a year before they start cutting that, they're going to need to cut that dividend. So it's not going to happen overnight. So if you're a dividend investor and people are telling you, oh, dividend, they can cut it anytime, sometimes you will see it coming, okay? And when you do, then you can actually sell this stock and take your money or whatever. So annually you get $5.60. Right now, okay, I'm getting £83.30, okay, so from this company. I own, I think, 25 shares, and that's basically what they pay me per annum. Of course, like I said, it's fairly valued at the moment, so that's the first company. The next one is Union Pacific Corporation. This is a railroad company. This is one of the companies that I had bought really early. So when I started the portfolio, I was doing my research. This is one of the companies that came up, and I really like the railroads, okay, railroad companies. So Union Pacific is currently basically trading $256 per share. It's a huge company, 156 billion market cap, and they do pay me about £88.40, which is quite nice. Okay, I do own, I think, about 26 shares. I'll show you very quickly how many shares of these companies I own. But yeah, so over 88 pounds. Right now, it is expensive, okay, 17% premium. I wouldn't actually touch it unless it goes below 200. Maybe, I don't know, if it goes between 210 and 215, potentially I might start adding to it, but right now 256, it seems really expensive to me. Now the next one is AstraZeneca. As you know, if you've been with me for the last year and a bit, AstraZeneca was kind of a newish company, starting buying a year ago, and at the time it was really undervalued. I bought a lot at that point. I think I own about 40 shares. They paid me almost £100 right now, and as you can see here, they are actually, when it comes to the dividend side of it, I wouldn't worry too much about this stuff here because this comes from Simply Safe Dividend. Now if you want to know more information about it, go to Dividend Max and you will see in terms of dividend growth side of things, you'll get that information. But the fact that they're paying about £100 for owning, I think, about 40 shares, I'll share that with you guys in a second, and it's fairly valued at the moment, so $78 per share. So we're looking at the US stock. So that's the third one. The next one is Medtronic. Medtronic is still undervalued. I've bought a lot of this company. I think I own about over 60 shares. So one of those companies that have been neglected, if you like. So they're expecting the price to be about $120 to $112 per share. My average, I think we're getting closer to my average. So because right now, I think I should be up, but I think it's because the FX impact is actually what's holding me back. Let me show you, in fact, because I want to make sure I'm telling you the truth. There we go. So I would have been right now basically break even right now. They're about 1% down, if you like. But because of the FX impact, I'm down about 4.5%. But overall, it's coming back to my price. So it's about 87 right now. My $88.60 is basically my basically average, which is fine. So I get over 106 pounds basically a year from this company. The next one I want to show you is Air Product and Chemicals. This is one of the companies I'm genuinely monitoring right now, and I said it recently. We talked about it, and the reason I'm monitoring is because the free cash flow. So free cash flow is negative right now, and I really don't like that. But I'm getting $112 per share from this company right now per year. And is fairly valued. I really like the company. I like the business model, but I don't like the free cash flow being negative right now. So I'm going to keep monitoring that one. Again, this is another, by the way, dividend aristocrat. So it's been paying dividend or increasing dividend over 41 years. And it is saved 95% despite the fact that they have a basically negative free cash flow. But I would like the company for the next, I said I think until beginning of next year. I'm going to give them till the beginning of next year. And if nothing happens, I will take my money and put it somewhere else. The next one is one of my all-time favorites. That's J&J. Currently, I'm receiving $126 per share. By the way, any of these can change. If I start buying more of the company, of course, that will change. It's fairly valued right now, $164 per share. It's a great company. Safety-wise, is absolutely fine when it comes to dividend. They have increased this dividend for 61 years in a row. So they are a dividend king. 50 plus is a dividend king. So a really great company. I like the business. There was a bit of a lawsuit still ongoing kind of thing, so that is still in the balance, so you have to be careful with that. So if you invest in J&J, do your research before you start investing, inshallah. Hershey is another company that I started buying. I think at around the same time I started buying AstraZeneca. It's about a year and a bit in the portfolio. $135 per share is what I'm getting right now. I can't remember how many shares I own, so I'll show you guys in a second. It's cheap at the moment. It's about 8% discounted. I think a lot of that is because it's been neglected because the growth is not there right now, because the cocoa price has actually gone up quite a bit, so the margins get squeezed a little bit. So there's a lot going on with the company, so you have to be mindful of that. $210 per share is where they think the price should be. Right now it's $193 per share. Now, number 3 is Reckitt Benckiser. You might be thinking, what on earth is going on here? But when you look at this Simply Wall Street and Simply Safe Dividend, it gives you, of course, a different valuations. But this is exactly how much I'm getting based on the the information that I've got it from the company website. $192.50 per share from this company per year from this company. I wasn't sure it was a per share. And when it comes to the dividend, I wouldn't worry too much. Again, go to Dividend Max, go to Simply Wall Street. You get some more information because they have increased that basic dividend for the last 10 years, and it is actually stable. That's why I put it here. Simply Safe Dividend does not have any information about this company. It is fairly valued right now, $74 per share. I really like the business, but the issue is right now it's down so much. Okay, I think this is my highest, if not. So I'm gonna leave it alone. I bought 100 shares. I'm gonna leave it alone, see what happens. My average for this company, just to kind of get it out of the way, is I think £54, and right now is about £43. I've seen it bounce back, so I'll leave it alone. I might give another year, 2 years. I like the dividends, I like the company, generally I like the business model, so I'm gonna leave it alone and see what happens in the next few years, if you know, inshallah. The next one is UPS, another one that's, I think between these two I'm down quite, I think over £2,000 when you look at my portfolio, which I will show you in a second. But I'm getting over £200 right now from this company. I really like basically UPS. I might buy more. Okay, it's still discounted about 14%, $150 per share is where they think the price should be. About 130, let's call it right now. There's a lot going on with the business side of things, okay, and right now coming out of COVID, this company's done really well. And then I bought it when it was slightly a bit expensive, but right now $128 per share is basically where it's at. It's basically hovering around this price for quite some time, so I'm gonna leave it alone. I might add a couple of more shares here and there whenever I get the opportunity. But I like the fact that the dividend yields right now is about 5%. So hopefully if I buy more and it bounces back, then my yield on cost will be way higher than where it is right now. So overall, the dividend is safe. You get $6.52. Basically, the margins are really good for this company. They actually expect it to grow 20% this year, which is absolutely ridiculous. And then 3% every single year after that is still discounted. So I like the business. They're not going to go out of business anytime soon, inshallah. So I'm going to continue accumulating more shares of this company, inshallah, as we go along. And finally, the next company that we're talking about today, the one that pays me the highest, is Rio Tinto. Now, the dividend is not safe because they did cut recently, and there are a few companies like this one and this one, Rio Tinto and Reckitt Benckiser, both of them UK based companies. They are in the portfolios just for that dividend. Okay, I'm not expecting a huge price appreciation. Rio Tinto actually has done well over the last 10 years, but I'm not really expecting huge, growth side in terms of price appreciation. It's that stable companies that are in the portfolio that I know they're going to pay me that dividend. They have good businesses. So if I just don't worry about the fluctuation of the prices and what happens in the general markets, these are like basically consumer staples kind of company, especially Reckitt Benckiser, and also Rio Tinto is very, very, by the way, volatile in terms of the price depends on the price of Rio Tinto, the stock price. I mean, the stock price will shoot up when the prices of the iron ore and everything else basically go up. So overall, they paid me over £340, which is absolutely amazing. Okay, I do own 100 shares. I'm not touching that at all right now. In fact, I've left that out. $4.34 is what they will pay me. So again, that's the basically 10 companies I wanted to show you guys today. So as you can see here, let's call it £1,500 from these companies. Like I said, some of them are very good dividend growth. So there's like these companies here, even basically Medtronic is a good one, J&J, Product and Chemicals, if they can sort out that situation. Hershey's I really like, and the rest of them. The only one that I would say right now I wouldn't actually add to is this one here. So I'm going to leave this one alone and just see if it bounces back, inshallah, in the next few years. But the rest of them I would not hesitate to actually add to them in the next few weeks if I basically get the opportunity. And of course I need to wait before I can add to this one. I need to wait a couple of more quarters to see if that changed. Anyway, let's move on now. Now what we're going to talk about is the dividends that I've received for the month of August. And then inshallah I'm going to show you overall how many, basically what I'm expecting for the month of September, inshallah. So in August, 5 companies paid me: ASML £5.50, Procter & Gamble £23, Mastercard £4.41. Again, this is, I don't expect much from this company or this one because it's more to do with the price appreciation, more like. And APD, automatic data processing, as well as MSCI have paid me between them about just over £40. So that's the dividends that I've received for the month of August. Now let me quickly show you just this rough estimation, just to because this can easily change. Okay, because if I buy more before these companies go on their dividend, in fact they've already gone ex-dividend anyway, but because I have to pay that 15%, and what I mean by that, because I'm based in the UK, so that is one of the reasons I pay for that 15%. Now September I'm expecting closer to $600. Now that's not even accurate, and the reason it's not accurate is this. Okay, companies like let's see who would, company like AstraZeneca, I'm expecting way more than that. Why am I expecting more? Because it's a UK based, and this is not actual basically how much dividend they pay. Now same goes for RB. I think I'm expecting a closer to £80, not basically £20, and same goes for your Rio Tinto. So that can easily change. So these are the companies that I'm expecting basically money from, inshallah, in the month of September, starting with Visa, Cummins, UPS, AstraZeneca, J&J, S&P Global, Home Depot, Hershey's, Lind, RB or Reckitt Benckiser, and then Qualcomm, Rio Tinto, Broadcom, UNP or Union Pacific, and then ADP, Automatic Data Processing. All of these companies. In fact, these two will be in this one actually will be 1st of October, so it's just up to here. Just to finally show you for the month of basically August, I've been paid £72, and as you can see here, roughly, but the last is basically similar to about what happened 2 years ago, because maybe I've sold some of the stocks that I used to pay a lot in August. For that reason, is that's why we're here. Now, for me, one of the most important things is, and that I'm keeping an eye on right now, is this bottom part. And as you can see, we've now crossed that £1,000, and if I get £600 from these companies in the month of September, then that means we are very close to basically what we've received in the entire year for 2023. And I know basically December is a good month as well. So October, November is not great, but December is another good month, inshallah. So hopefully we can easily beat this and see what happens, inshallah, overall. So yeah, that's what I wanted to share with you guys today. Of course, moving forward, only Allah knows what's going to happen, but I'm going to continue buying high quality businesses. I'm going to add them to the portfolio and just watch them basically for a year or 2 or 3 or 4 or 5. My plan is not just to sell any of the stocks. My plan is to be able, hopefully, to hold them for a long time. So as you can see here, you can just pause the video. You have a look at the automatic data process and AstraZeneca. We talked about Air Product and Chemicals, 25 shares. Who else? We took a Hershey, 40 shares. J&J, 41 shares. Medtronic, 60 shares. We've got, who else? Procter & Gamble. No, we haven't talked about that one. This one I've already said. These two are basically 100 shares each, and then Union Pacific is basically 26.5 shares. And as you can see here, I thought actually I had 50 shares, but I've got 40 shares, but I've got 50 shares of United Parcel Service. So inshallah, hopefully we'll see what happens, inshallah, in the next few months. I'll continue doing this, inshallah, share this with you guys. I hope you enjoyed this content. I'm sorry it's slightly longer than I wanted it to be, but I think we covered quite a lot. So I appreciate all your time, inshallah. Have a wonderful day. Assalamu Alaikum.